All righty, let's get started here. Today's take on the market. Today's date, July 23rd, 2021. My name is Arnie Gutierrez. I'm a senior product coach here at MarketSmith, filling in for the very famous Scott St. Clair. He will be back next week. He's on vacation, well-deserved vacation. I always say that, but he's a great guy. Before I jump into this, I definitely want you to take a moment, read the disclaimer. Just basically, any stock I go over today is for educational purposes only. We don't give any buy or sell recommendations, and we're not licensed. Okay. You definitely have to do your own research, but we're here to help. So, market gauges. Interesting week, right? Monday felt like the market was, it was definitely showing a lot of weakness. It's funny. I had done the take on the market last Friday, and we all saw that the indices were either slightly below or slightly above the 21-day EMA moving average I'm referring to. All right. But then Tuesday, Wednesday, Thursday, Friday, 4 days straight, the market's going up. You're starting to see all-time highs, both on the S&P and the NASDAQ. Market showing strength, until proven otherwise, is staying above it. One day doesn't make a trend, but we had 4 days. Leaders are acting pretty strong. I was looking at Apple's, looking at the Googles. I was looking at Facebook, NVIDIA, and the Amazons. Everything's holding up very nicely. Snap had a great day today, broke out on huge volume and huge price action, which was very interesting. But portfolio-wise, I'm starting to gain traction, but I'm not there yet. I'm feeling it, but I don't want to, until proven otherwise. I still need it to prove itself to me, so I'm going to keep it at a yellow. I was very close to going green, but not there yet. Obviously, there are some rotations taking place. We are starting to see leadership take hold. The NASDAQ, the tech companies are coming in and playing ball. Markets. I'm going to go ahead and jump in the markets very quickly. And give me 1 second. Okay. Let me just make sure I can share this. I apologize. Still getting used to this whole thing. Okay, we have the NASDAQ here. The market's been closed for about a good 27 minutes now. Just want to make sure it's refreshed. And look, it is what it is. Market's been going up. Volume's been a little light, but still, price action is king. And right now I'm seeing this take place. The moving averages that I have there, you can see it's the 21-day EMA. It's 2.2% above that. Do I think going to possibly? We'll see what happens in the next week. I do think there may be a retest. Obviously, like anything else, what goes up must come down. You have to have a retest. But I do like the market action right now. It's showing a lot of strength, coming into August. Obviously September is coming in after Labor Day. Job market's been very strong. So we are in the interpretation business, not the predicting business. And what I'm seeing here is a lot of strength. Okay. Institutions are coming in. You can see the right side of bases being formed, which is a fantastic indicator. So again, looking at this here, the trend is up. Okay. In 1 second, market uptrend is up. So I definitely love today's action. I'm gonna jump in the S&P 5 real quick. You can see this here, a slight little gap up, but again, above the 21-day. We saw what happened on Monday here. However, it stayed above the 50, right? We're like, uh-oh. And you can see Friday slightly above the 21-day, but then it popped, it bounced with conviction, and it held up for the last 4 days. Okay. So again, it's a very strong indicator, very strong sign. However, I'm gonna switch it up a little. Small caps, mid caps, IWM, the Russell 2000, still living under the 50-day sign of concern for me, as well as the 21-day. We may be seeing a rotation with tech stocks, large cap stocks coming into play, probably within the next couple of months. We'll see. That's what I'm interpreting right now. But again, it's not a good sign when you have the small caps and the mid caps living under the 50-day, especially the 50-day. Okay, so I'm going to go ahead and jump back into the so I just went into industry groups. Now I'm going to jump into industry groups, and I picked 3 industry groups today where I saw that industry group rotation taking place. This report's coming from the 197 industry group, and I'll go live just for those of you that are new here. I'm looking for a pop, and what I'd like to do is I like going through the 3 months and seeing what industry groups are moving very quickly. And you can see here, computer software enterprise 3 months ago was 158, last week 58, this week 42. Medical research equipment last 3 months ago 90, last week 41 at 36. And then also computer tech services 114, 23, 18. Why is that big? Because we're looking. I'm seeing an industry rotation taking place. This is the only way you really can see it in MarketSmith. In order for industry groups to move up in rankings, the stocks within the group have to go up as well. Okay, it's a phenomenal proprietary list that our founder Bill O'Neill created years ago. And again, it's with the whole mentality: all stocks are bad unless they go up. And industry groups in general, the leading stocks like moving up in packs. Okay. So again, these are the ones I definitely saw taking a leap. I will be doing my research this coming weekend because we do have a pretty huge data dump on Friday nights. I like doing this on the weekends, but I'm just sharing with you what I'm seeing right now. Okay. With that said, let me just see something here. I'm going to go over 3 stocks, and I definitely want to pull that up very quickly. And so first stock I'm going to come up with, it's going to be correlated with the industry groups I just presented. Computer software enterprise, we have Salesforce. Okay, it's in a first stage base, pivot price. And pull up the weekly. All weeklies first. That should be that's our mantra here. First stage base, pivot price 270.92. Okay, obviously the RS rating is lagging. There's no such thing as a perfect stock, but we haven't bought this stock yet because it's at 270.92. We'll see what happens in the next couple of days, right? I also want to mention composite ratings at a 90. Number of funds has been holding pretty steady. Okay. So I'm looking at earnings and sales here, and the up-down volume ratio is above a 1.1. So I'm going to be looking for the up-down volume ratio, which is a great indicator, visual indicator of the chart. It's at a 1.1. I like a 1.2, but again, things can change in the next couple days as well. All right. So I'm going to throw that out there and just keep it on the watch list. Next stock I'm going to look at, MEDP. Okay, you're going to see this here. Definitely showing a lot of tightness. Buy point here, it's at 183.72. Okay, so it's getting very close. RS ratings at a 79. This may change in the next couple of days. I like anything above an 80, 85. But the composite rating is very strong, very powerful rating here. My favorite rating, it's at a 95. I like anything above a 90. Number of funds has been going up quarter after quarter. Okay, and the up-down volume ratio is at a 1.3. All right, just see this real quick. Quality of ownership, you guys. Yeah, the number of funds is going up, but I also want to make sure there's quality of ownership. That's why we added the IBD mutual fund index component here. Allows me to really gauge if quality mutual fund managers have a position in the stock. These funds were hand selected by a team of editors as well as in-house portfolio managers for O'Neill Company. So again, there is one. I like seeing at least one if possible. Obviously, it's not always going to be perfect, but it does tell me that the smart money is looking at this information here. These funds that were selected are kind of like, if I had to refer, like the Kobe Bryants, the Michael Jordans of their peers and so forth, continuously outperform the market. Okay, and then finally, I'm going to go with CDW. All right, computer tech services. Again, buy price here, pivot price is at 179. It did hit it slightly. So I'm going to be looking at this stock in the next couple of days, but I do want to emphasize this as well. We are at earnings season. Earnings are going to be released in the next 12 days. Food for thought, just be very cautious for that. Be very careful. Someone had sent me an email last week regarding positioning myself with earnings, and Scott Sinclair and I will be doing a webinar next Thursday on Stay in Step, and we'll be focusing on earnings season here, what to do, what to handle. But me personally, unless I have a 10% cushion, most likely I won't hold a full position into earnings. It's always a crapshoot. Who knows? And if you do want to hold it, I may just cut it in half. We could always buy it back the next day. But again, next Thursday we'll be talking that more into detail. But looking at the numbers here, composite ratings at a 95, RS ratings at a 75. Again, you have this here, number of funds going up quarter after quarter. Earnings are picking up as well as sales. Earnings and sales are picking up last 3 quarters. Up down volume ratio is above a 1.2. It's at a 1.4. Okay. And you have quality ownership here. You see 3 of the funds that make up the IBD mutual fund index have a position in the stock. So I'll be watching this one, putting on the list as well. All right. So yeah, definitely, you definitely want to be doing your research. The market has been showing strength. Okay. And every day we should be waking up not knowing what the market's going to do. We're not going to predict the market. We're going to be interpreting what's happening. Okay. And then finally, I'm going to go ahead and something instead of quotes, my good friend Scott Sinclair, he loves quotes. You know what? For this one, I'm going to switch it up. He does 3. I kept 3, but I'm going to do Arnie's webinar of the week. And I'm going to really highlight this webinar. You want to check out this webinar this weekend because of earnings season. It's been a lot of gap ups, like Snap gapped up today. Nike gapped up a couple of weeks back. How to handle these gap ups, understanding breakaway gaps. My colleague, Harold Morris, does an amazing job going over this. So please check this out. It's under chart analysis in the webinar section. So you would go into resources, chart analysis, and you'll find it there under chart analysis. It's about a 30-minute webinar. It's worth your Saturday if you could just pay attention, maybe play a couple times just to see what's happening, because you may start seeing a lot of gap ups and a lot of leading stocks and what you should be doing. So I'd rather share this with you now. Go through the game and see what's happening here. And then finally, I definitely want to pull up MarketSmith real quick. Kind of like I have my own little leaders list here. I'm looking at what Amazon did today on the weekly chart just to get a feel. Apple, Google, Facebook, Microsoft, NVIDIA. Okay. So again, everything's holding up, showing a lot of strength. Nothing's really falling apart. NVIDIA just had a 4-for-1 split. So we'll see how that works out, but it looks like it's holding. Yeah, so good stuff. It was a good week. Monday started off shaky. I'm not going to lie. We're all just like, what's happening? Here it goes. And then all of a sudden we stood back, didn't predict, it did break through very quickly. The NASDAQ did break through the, give me one second, the 21-day, but it stayed above the 50. But we were under pressure now. We know this is some serious pressure coming at us. Okay, so the way I'm looking at this now, one day doesn't make a trend, but 4 days possibly will. All right, we'll see. May have another pullback, maybe retest that action that we see here. But who knows? Again, we're not predicting. We're trying to stay within flow of the market. Okay, and then finally, let me pull this up. For those of you that have any questions, and I'm still getting used to this, I apologize, you guys. It seems kind of, here's our information here. There are the emails. You can send an email to reach us at marketsmith.com. That's our telephone number. Again, the way the market's going now, leaders are holding up. We're probably seeing a rotation. A lot of the big cap technical tech stocks are looking very, very strong. So it's a pretty good sign. Okay. We'll see what happens. Obviously, there's a couple of other macro perspectives going on in the economy with COVID numbers going up, with inflation. So again, we want to see how this market's reacting to it, and we don't want to predict. Okay, that's one of the things I've learned in my 18 years here. I've lost more money predicting than anything else. Okay, so every day just interpret what's taking place. Please be safe out there. Thank you for listening, and please check out this webinar. I think it's very relevant for the next couple of weeks. All right, take care and have a great weekend. Bye-bye.